We've seen the biggest disruption to global growth in recent history. What can we do to fix this problem, and how can we progress from here? Joining me today to discuss this issue is Dambisa Moyo, best-selling author and economist. Dr. Moyo, it's a pleasure to speak with you today. Welcome back to Kitco.
Thank you. Pleasure to be here.
The pandemic and COVID-19 has caused massive disruptions and damage to our global economy. You've talked about how you don't think we're seeing a V-shaped recovery. What is the road to recovery going to look like, in your opinion?
So there are a lot of questions embedded in your question, David. Maybe let me just take a moment to take us a little bit before COVID hit in earnest in the beginning of this year. We have to remember that even before COVID appeared, the global economy was in a pretty precarious place. Global growth forecasts for both developed and developing countries were quite low. And by that, I'm talking about really below the 3% target that you want in order for an economy to double per capita incomes in a generation. In fact, in 2019, the last quarter of 2019, Germany recorded 0% growth. And many of the largest emerging market economies like Brazil, Russia, South Africa have been struggling, not only from being in a recessionary environment, but really showing quite paltry rates of growth around 1 to 2%. But in addition, we were already worried about a number of economic headwinds. We've been deeply concerned about technology and the risk of a jobless underclass. There have been lots of discussions about demographic shifts and the fact that today's population is around 8 billion will continue to grow very rapidly until 2100, according to the United Nations, when there could be as many as 11 billion people on the planet. Places like India are adding 1 million people a month to the world's population. We worried about income inequality, the fact that in the past 30 years, U.S. income and social mobility has gone down by 50%. There's been issues of climate change, worries about the sheer amount of debt that government has been carrying, but also corporations and households. And also we were worried about productivity declines. That was already the hand that we had before COVID hit. And in that respect, COVID has really just been an accelerator, a catalyst of a lot of the issues that we were dealing with. And I worry a lot that this notion of a V-shaped recovery has tended to discount the fact that that COVID has essentially is accelerating a number of the issues that I just outlined.
So your thesis is that COVID has exacerbated some of the existing issues. Has it created new issues that maybe you haven't foreseen before?
Well, clearly, health in of itself. I wrote an article in 2017 about the risk of a pandemic. I mean, it's one of those things that, when hindsight is 2020, a lot of other people had flagged concerns around global pandemics. I mean, I think the issues around deglobalization and the coordination failures that we've seen with the international organizations and multilateral institutions are things that were perhaps discounted as being problematic, but clearly, with the advent of COVID, it's revealed that these issues are much deeper and likely to be much more systemic going forward.
Going back to some of these systemic issues that you talked about, you've written about these issues before in your book, Edge of Chaos, Why Democracy is Failing to Deliver Economic Growth and How to Fix It. You've talked about some of these issues and some of the prescriptions that you've recommended for democracies to fix this. Now, can you walk us through, for the viewers who maybe haven't been familiar with your work, why these issues have existed in the first place?
Well, so, the fundamental premise of my book, Edge of Chaos, is a little bit of a departure from my own haunt. My PhD from Oxford is in economics. But what has become clear to me, not only because I've worked on Wall Street for a decade, as well as being on corporate boards for a decade, what's become more and more clear to me in the past 20 years is that really public policy and politicians really set the tone and the business environment, and ultimately are important in terms of creating long-term prosperity and human progress. And so really what I was doing in Edge of Chaos was highlighting the suite of economic problems that I outlined, from technology and climate change, et cetera. But at the same time, I was saying, well, in order to solve these long-term, deeply structural problems that really pervade different generations, we need governments that actually also have a similar long-term purview. And one of the problems with the democratic system, which I love and support, is that governments are inherently short-term. We reward them for being short-term. And there's this massive schism that's emerged between the suite of long-term economic problems against the short-termism that governments have. In the United States, you have elections every 2 years, and yet business cycles in the best case scenario are around 5 to 7 years. And we need the kind of thinking and focus around some of these issues, and the proposals that I offer in Edge of Chaos really try to address two things: the short-termism embedded in the political structures, particularly democracies, but also to try and figure out ways in order to get better and more voter participation in elections, which obviously has waned considerably over several decades, particularly in Western society.
Let's apply the same principles you wrote about in your book to today's situation. Do you think that democracies were ill-equipped to cope with the economic crisis that we saw in 2020?
Well, I mean, I think it's too early to say. I think you'd be hard-pressed to find an economist who would object to the suite of options that government has taken. If anything, I think governments have gone far beyond what we might think are sort of the realms of possibility. I would never have imagined an environment of negative interest rates, which happened obviously before COVID hit. But I would never have also imagined just the sheer amount of capital and cash that governments are printing through quantitative easing. I mean, the stimulus packages, as we know, are enormous and multiples of what was already used to support in the aftermath of the 2008 financial crisis. But there are many other things that governments and the central banks are doing that I completely support, because I think they make sense. But at the same time, I worry about as being, really out there in never land. Things like buying corporate debt, as we've seen the Federal Reserve do. I mean, to buy subordinate, sub-investment grade debt is something that is hard to fathom, but clearly a necessity, given the fact that roughly 20% of American corporations are considered zombies. And by that, I mean they don't even have enough cash flows to cover the interest payments on their debt. So we are in a world where governments are having to act in ways that require a lot of imagination for classically trained economists like myself.
I think that a lot of economists and analysts I've spoken to have placed a lot of blame on governments and central banks for not reacting in a way that they would have deemed appropriate. Let's look at the private sector now. Now, you're working on a book called How Boards Work, which is coming out next year in the spring. And you're writing about the importance of corporate structure in America and abroad. So can you give us a synopsis of, first of all, what your book is about, and applying the same principles back to today's situation? Have corporations properly prepared themselves for a black swan event like we've seen this year?
So first of all, my book is really born out of a number of articles that I've written for Harvard Business Review on the role of corporations, but specifically the role of boards. Boards are at the top of the corporate structure, and they play a critically important role. Traditionally, based on Milton Friedman's assessment, corporations were really focused on profits, but over 50 years, and obviously in the back of the Business Roundtable's announcement last year, was much more focus on stakeholders more generally. And so, what this book is really about is really trying to give people an understanding of what is it that corporate boards actually do, what is the mandate, and really helping existing board members to think about the range of challenges that we will have to grapple with in the decades to come, whether it's digitization and technology concerns, issues of the cultural frontier, which are pervading the environment, even 2020. I tend to be perhaps perhaps unsurprisingly, quite sanguine about the role of boards. I think boards are critically important in terms of checking and challenging the management, and also a conduit for articulating and kicking the tires on some of the social changes that we're seeing around the world. I do think that if you take a step back and think about how important corporations are in terms of delivering, billions of goods and services around the world every single day. I was just talking to someone, many of us have ordered a box of, a bed from IKEA. And if you think about how rare it is for mistakes to happen, you'll get all the pieces in your IKEA box. You start to understand that being able to execute in that way is really an important responsibility of corporations. And unfortunately, we do get it wrong sometimes. Corporations get it wrong, boards get it wrong. But I think at the same time, there's a lot of scope for improvement in the boardroom and with corporations. But also, it's very important to understand that this is a critically important governance and custodial role that companies must continue to support.
If you look around the world, how would you rate the importance of corporations and their boards versus public policy in driving the economy back to the road to recovery? Let's just take emerging markets, for example. Why is it that China is leading the recovery versus Latin America? Why are they behind? What's causing this rift in recoveries?
David, it's interesting because I don't see the sort of space as either or who's going to lead. I think it really has to be a partnership. And certainly in the United States context, where it's a very well-established history of success, where you saw government and corporations working together to not only, in fact, in many instances, government even leading to create an environment that was critically important for economic growth and innovation and long-term success. Whether it's Silicon Valley, and there's a wonderful book called The Code by Margaret O'Mara, which talks about the history of Silicon Valley. But if you look at Felix Rohatyn, the late Felix Rohatyn's book about building the interstate and the infrastructure, critically important for government to be involved there. Manhattan Project, obviously the establishment of the internet. I mean, these are very, very well-known, important examples of how government laid the groundwork and was really a partner for corporations and business to support and be the backbone of the economy. So, when I look ahead, I think we've seen numerous examples this year of government and private interaction that have been incredibly important, whether it's examples of hotel chains providing healthcare space to different organizations changing their car parks. I think Walmart's an example that comes to mind, changing their car parks into testing facilities. I mean, there are real ways in times of emergency for government to work hand in hand with corporations and business. You asked me about China specifically. I mean, I've actually written about the nature of the economy in China a number of times, and there clearly are blurred lines between civic society, government, and business. In very broad terms. And so there are clearly ways in which the government and the political class in China is actually able to use levers in their context to influence capital allocation, labor allocation, and also really influence the civil society in quite a different way that we would see in the West, where the lines drawn between civil society, so NGOs, versus government and private sector tend to be much more stark. But in any case, the point is, my view is that in times of crises, as we've seen in 2020, government and private sector tends to work, as well as civil society tend to work much more closely and effectively together.
Dr. Moyo, let's turn back to the U.S. now. We're seeing record levels of unemployment. It's come down a little bit since the peak of the summer, but a lot of people, especially investors, are wondering, what is it going to take for the workforce to return back to the labor force?
Yeah, so I've been doing a lot of thinking around this area. I think there are two aspects to your question. On the one hand, corporations have taken a very broad definition of what they mean by employees, and really trying to help address the unemployment situation. So rather than just narrowly thinking about your full-time employees, people have been looking at supply chains. We've been thinking a lot about how should we think about subcontractors in terms of providing healthcare, but also support during these very challenging times. But I think that there's a more fundamental question that needs to be addressed, which is the trend lines around employment. We saw after 2008 that the participation rates in the US economy have actually declined and have not ever reversed, even after a lot of stimulus packages and a big effort a decade later to try and reverse some of the challenges that came from the 2008 financial crisis. What does that actually mean? It means that there are structural factors that are quite worrying around what might happen to the unemployment number today and going forward. That is just one aspect. The participation rate is just one aspect. I think the other element which we need to think a lot about is digitization. As we look ahead, how should we be thinking about digitization? I know corporations get a bad rap in some respects as being seen as only worried about the costs and the bottom line. I think that there's much more nuance around the discussions that I'm privy to around the issue of how we think about running businesses as corporate citizens, good corporate citizens. But nevertheless, it is true that in a number of the places where I spend my time thinking, public policy is desperately concerned about how digitization may lead to a much more and deeper structural trend in unemployment in the years to come.
Dr. Moyo, if we're looking at the work from home culture that a lot of people are being accustomed to right now, do you think that COVID has destroyed certain sectors of our economy and permanently wiped out certain jobs?
So I would say it's too soon to tell. In my article for Harvard Business Review, I did talk about the fact that it is now absolutely a board responsibility to think very objectively about the plight and the viability of the sectors in which corporations operate, because I do think some sectors will be materially affected over the long term. It's too soon to say, because for every introvert that's happy to work from home, there's an extrovert who says, desperately want to go back to work. I mean, I wrote an article in the Financial Times not too long ago talking about what might actually happen in the real estate market, which everybody's focused on right now, because in many respects, and that's one sector which could be materially hit, certainly urban real estate could be deeply affected by what we're seeing from the work from home culture. But I think it is too soon to tell. We're 9 months into this crisis, and I think we need to remain open-minded. And from a board perspective, our job is really to think about risk mitigation and thinking about how we should allocate capital. And ultimately, I think for those two areas, governments and corporations are very much focused in terms of what sectors could be hurt the most.
Do you think there's an element of creative destruction happening right now in our economy? We've seen this happen before, where the move towards automation, which a lot of economists have argued that we're moving towards, has wiped out certain jobs but created new opportunities for others. This happened during the Industrial Revolution, for example, where agrarian economies shifted towards a more industrialized, factory-centric economy. Is this happening now?
I mean, I think, frankly, especially in a place like the United States, creative destruction is happening all the time. It's sort of the nature of the economy. It's built on new ideas, new, better, faster, so to speak. And really, you've given one example, the Industrial Revolution. But if you look over since the 1900s to today, 1900s, about 60% of the American workforce was involved in agriculture. Through a whole host of push and pull factors, people moving to the cities, hoes being replaced by tractors, more industrialization that you touched on, you ended up with a situation where today you have the bulk of the American workforce is in services, somewhere around 80%. Around 18% have been working in manufacturing, and less than 2% work in agriculture. And that's happened really in over a century. The question that you're really asking is, ultimately, will we see more of a transition into a world of R&D and more science-based as we move into a technological sphere? And I think the answer is absolutely yes. And I talk a lot about that in my book, Edge of Chaos, because we've already started to see this again before COVID hit. For fun, I run marathons, and I've run multiple times into McDonald's where it turns out you don't even have to speak to anybody now. You can just type in what you want and swipe your card, and the food pops out. So already those types of jobs were already affected. And it's a wonderful paper that came out. It's been revised, but came out in 2013, which was already forecasting that we would see around 40%, if not more, jobs. It came out of Oxford Martin School, but basically a paper that looked at job diminution because of automation. And they expected by 2030, about 40% of jobs in the United States would be replaced. They have updated their numbers, but nevertheless, it's a great, just to get a sense of how public policy and academics are thinking about it. It's worth having a read.